Chinese EV maker NIO has made noticeable progress in improving its vehicle margins despite China's fierce EV price war. In 2024, the company's vehicle margin rose to 12.3%, up from 9.5% in 2023. Meanwhile, Li Auto has built a strong reputation around its extended range vehicles, which offer both EV benefits and range flexibility. NIO's stock price is down 20% year to date, whilst Li Auto has fallen only 4.5% since the start of 2025. So, if you're looking to invest in an EV stock for future growth, which is better, NIO or Li Auto? In this video, I'll try and answer this question by breaking down each company's model lineup, the recent sales numbers, and future plans. China's new energy vehicle market, comprising of battery electric vehicles and plug-in hybrid models, continues to thrive. More than 11 million EVs were sold in the country last year, up over 40% from 2023, according to the China Passenger Car Association. In the first quarter of 2025, sales of passenger EVs in China were estimated at around 2.86 million units, an increase of 43% from the same period last year. Chinese EV maker NIO has made great progress in improving its vehicle margins, despite China's fierce EV price war. In 2024, the company's vehicle margin rose to 12.3%, up from 9.5% in 2023, and this was driven by stronger production volumes and cost optimization across its entire supply chain. Quarterly results also displayed steady improvements. Margins were 9.2% in Q1 2024, 12.2% in Q2, and 13.1% in Q3, amid lower material costs per unit, which were a key driver. While Q4 vehicle margin was flat compared to Q3, it was still reasonable given the brutal price war in China. And NIO targets a 20% vehicle margin for its namesake brand and 15% for its mass market Onvo line in 2025. Despite steady price margin progress, NIO is still burning significant amounts of cash. At the year-end 2024, it only had 2.6 billion in cash, with 1.56 billion in long-term debt. Its high debt to capitalization ratio of 76% does point to financial pressure, and NIO remains unprofitable. However, the company is investing heavily in its battery swap network, a costly operation, while competitors focus on simpler charging models. In addition, vehicle deliveries fell to 42,094 units in Q1 2025 from 72,689 units in Q4 2024. And investors are waiting for more than just cost cuts. NIO needs to double down on its marketing, launch new models, and boost revenues without relying on price cuts. Its overseas push, especially in Europe, faces challenges, including heavy tariffs. Until NIO proves it can grow profitably in this highly competitive environment, the stock price may continue to lag. While it's aiming for break-even by the fourth quarter of 2025, achieving this goal will be challenging. Meanwhile, Li Auto has built a strong reputation around its extended range electric vehicles, which offer both EV benefits and range flexibility. Each of its popular L-series vehicles, including the L6, L7, L8, and L9, have all delivered over 200,000 units. Last year, the company launched its first pure battery electric model, the Mega. Li Auto plans to launch additional battery EVs, including the Li i8, i6, i7, and i9, over the next 12 to 18 months. And the Li i8 is expected to launch in July this year, while the i6 will be released later in the second half of 2025. Meanwhile, NIO has been focusing on building pure EV models only. NIO's vehicle lineup includes the ES6, ET5T, ES8, EC6, ES7, ET5, ET7, EP9, EVE, ET9, and EC7 models. And in late March 2025, the company commenced delivery of the flagship NIO ET9. Besides the NIO series, the company has two more brands: mainstream mass market brand Onvo and high-end small car brand called Firefly. Onvo's first model, the L60, has been well received, but sales have been slow. And its second product, the L90, is expected to begin deliveries in the third quarter of 2025. Onvo's third product is planned for launch in the fourth quarter. Meanwhile, Firefly's first model is set for launch later this month. Li Auto's deliveries are significantly higher than NIO's. Li Auto delivered 92,864 units in the first quarter of 2025, up 15.5% year over year. Li Auto delivered 500,000 vehicles in total in 2024, up 33% from 2023, with over 500,000 annual vehicle deliveries within just 5 years of the company's first delivery. Li Auto did set a new benchmark as the fastest growing premium auto brand in the Chinese market. And in the first quarter of 2025, Li Auto has already delivered over 92,000 units, in line with its sales targets, which is an increase of 15.5% year over year. Li Auto's cumulative deliveries totaled 1.226 million as of the end of March 31st, 2025. Meanwhile, NIO delivered 221,970 vehicles in 2024, marking a 30.7% year-over-year increase. Now, while that's impressive, it's less than half of Li Auto's total. In the first quarter of 2025, NIO delivered 42,094 units, an increase of 40% year-over-year, and within the sales target set by NIO management. As of March 31st, 2025, NIO's cumulative deliveries totaled 713,658 units. While NIO's pace is picking up, Li Auto remains far ahead in total sales volume. Looking at vehicle margins, the metric for Li Auto was 19.8% in 2024, down from 21.5% in 2023, but still better than NIO. Last year, Li Auto generated an operating profit of 961 million and a net income of 1.5 billion, underlining its status as a profitable EV maker. And Li Auto also leads comfortably in terms of financial performance. Its total revenues were 19.8 billion in 2024, up 16% year over year, with vehicle sales making up the bulk. NIO, on the other hand, generated just over 9 billion in revenues in 2024, an increase of 18% year over year, with vehicle sales accounting for 89% of the total revenue. The company incurred an operating loss of 3 billion. While it is aiming for break-even by the fourth quarter of 2025, profitability remains a challenge. While NIO is making progress, it's a long road ahead. To stay competitive, it must execute its 2025 targets and find new ways to drive growth without losing ground in the hyper-competitive Chinese EV market. One thing that makes NIO unique is its battery swap business. Right now, building out the swap station infrastructure is having a massive impact on the bottom line. However, in the future, the battery subscription model could be the biggest source of recurring revenue for NIO, with owners paying monthly to access fully maintained battery swaps. So right now, based on the financial data, Li Auto looks like the obvious pick. But long term, if NIO's innovative plans come to fruition, its investment potential could offer more long-term growth. Since the $3 low a few weeks ago, NIO stock has rebounded around about 20%, reaching a peak of around $3.70 2 weeks ago. NIO had a quiet week last week, forming an inside bar. So the question for investors is, has NIO found support short term at $3, and will it move up in the next few months? In this video, I want to go over a few scenarios of what might unfold for NIO stock in the next few months, whether it's going to rise and break the trend line, or if it's going to fall further. And if it falls, where will it find support? So right now, the technicals are saying sell because the price is falling. However, the analyst overall rating is buy, suggesting there could be some value on offer. Let's check the chart. So on the weekly chart, we can see NIO has clearly been trending downwards since the all-time high back in around January 2021 of $66. And following the negative Q1 earnings report this year, investors got spooked, a lot of them selling out, resulting in the stock falling heavily into the recent low $3. So the question is, will it rebound from here or will it fall further? There was short-term temporary support around about this $4 level where NIO finds support back in January this year, early January, and also during February. And after that initial price rise of the peak of 550, price then fell away, particularly after the earnings report came out with the poor financial performance. So it's dropped back to $3, but the last few weeks it's trying to recover and make a move back up. So we can see on the weekly chart that NIO is in a downtrend. And as the price has fallen, it has fallen quite uniformly, making consecutive lower highs and lower lows. So each time the price has fallen, it's had a mini rally and pushed back up towards the trend line, but it's never broken this long-term trend line. So in theory, over the next few months, if NIO finds support at this $3 level and investors come back in seeing value at this price, there's a chance the price might rise up to challenge this trend line once again. So if you take this example here, from this low in August 2024, it found support, buyers came back in seeing value at this level, and the price rose quite significantly up to this peak here of 771. So what we might see over the next few months is buyers come back in seeing value at $3 and push the price back up towards the underside of the long-term trend line. And this would mean price may rise up to around about $5.30 to maybe $6. So you've got this level here of around $6, but also this recent peak in March 2025 of around $5.40, $5.50. So what we might see over the next few months is the stock price move up, perhaps to around that $4 level, just pull back slightly and then push up again to challenge that trend line around about possibly $5. So a short-term trade from the current price up towards the bottom of the trend line would give you around about a 40% return. And this might unfold over the next 3 months. But if NIO continues to trend downwards and respect this long-term trend, it's more than likely going to reverse at the $5 level and continue to push back down. Of course, if NIO reports favorably in Q1, then that might be the catalyst for this long-term trend to be broken and for NIO to start to move up, possibly above $6 first, and after this it would have to move up to challenge this peak here of the 770. So if NIO's Q1 report is favorable and perhaps they show increased sales with reduced losses, I think investors are going to like that and they might come back in seeing NIO as a great opportunity. And therefore price may break above the trend line, confirming buyer support. However, on the flip side, if the Q1 earnings report is negative and NIO posts good sales, but perhaps the losses, they just aren't significant enough, the reduction of losses aren't good enough to please investors, we might see more selling and the price falling further. So where could it fall to? So we might see something like this unfold if the Q1 report is negative. So after this short-term price rise up towards $5, challenging the bottom of the trend line, post Q1 earnings, if it's negative, we might then see a rapid sell-off similar to the Q4 scenario, and price might fall down towards that 360 level first, rebound back up to the bottom of the trend line, and then fall away once again down to the support level of $3. And worst case scenario, if there is a big sell-off because of the Q1 report, the price might fall through the $3 support level and head down to the $2 level, corresponding to the low back in April 2020. So that's a real possibility. If the earnings report is negative, losses are significant, even with increased sales, investors might just give up. They might just sell out based on the fact they've been holding on so long for NIO to make a profit, and perhaps for some of them that'll be the final straw. So if you're holding NIO now, what should you do? That really is up to you. Looking at the price chart right now, NIO is falling. It's falling because fundamentally the company is struggling financially and there's just not much confidence with investors to buy into NIO. Most are selling, therefore the price is falling. However, if NIO posts a positive Q1 report where they show increased sales and with the losses significantly reducing, that might invite investors back in to buy more stock. It might even encourage existing investors to buy more stock as they start to build confidence that NIO is starting to turn a corner and starting to pave that path towards profitability, which is planned for Q4 this year. I think that's a stretch, but there's a much higher chance that NIO will turn a profit in the next few years as its capital spending starts to reduce, especially on the swap stations, and the sales increase. Of course, they've recently launched the Envoy L60 and this month the Firefly. So if those two sell well in the first 2 quarters this year, that might be the catalyst just to start to change the overall feeling for investors and bring them back in. However, overall right now, based on the technicals, the risk is towards the downside, so be cautious. As I mentioned, there is a short-term trading opportunity from the current level up towards the bottom of the trend line around about $5, but you should expect price to reverse at $5 based on the previous price action and this resistance level through here, and also the fact that every time it's tried to push up, it has hit that trend line and reversed. But nevertheless, there is a good profit of 40% available for a short-term trade. And finally, just looking at the monthly charts, just to get the big picture of NIO, we can see this significant low here. This is the all-time low of $1.22. And you can see clearly that it has been in a downtrend for many months, respecting the long-term downtrend. Recently finding support at the $3 level. So when you look at the chart from this perspective, it does look as if price is potentially going to rebound towards the trend line, come back and challenge $3 again, and potentially move down into this sort of $2.50 zone before having a rally back up and then falling once again. So based on the long-term price action, we must expect price to keep doing what it's doing unless something changes in the market. Looking purely at the chart, it does suggest that the price for NIO is going to keep falling, but things can change quickly. If NIO posts a reduction in losses in the Q1 report with increased sales, that might just be the catalyst for things to turn around. And things can turn around very quickly. For example, if you look back at the price action a year after launch in October 2019. Once price found support at this all-time low of $1.22, it absolutely took off and surged up to $66. So it's quite possible that NIO could do this again, and especially if it starts to post profits in the next few years. Will it reach profits in Q4? I don't know. It looks difficult right now, but not impossible. If management makes appropriate cost cuts, sales increase, it's definitely possible. Thanks for watching.